And I think we've got Rohit Srivastava now joining us. He's, of course, founder of Indiacharts, seen markets a long time, looks at technicals, macros, everything. Rohit, good to have you with us here. Thanks very much. Yeah, I mean, you were expecting a bit of a pullback. That has happened. And then, but you were kind of expecting the market to stabilize, right? This is, on the downside, exceeded what you thought will happen. So where are we at in terms of indicators, and what's your sense?
We're never static about our expectations. So we had a couple of different alternate scenarios. The only thing that didn't happen is that it didn't bounce back to 25,600 that we were thinking in between. Now that it's broken the previous low, and it's not done that for Bank Nifty yet, but the signs are that that will also happen. It means that we are witnessing a free fall. One which is probably not over, even though you may look at certain technical indicators. So for example, if you look at RSI, all of them are dropping below 30 for Nifty, mid cap, small cap, 500, all of these indices. Again, not Bank Nifty, because that is still holding up better than the others. But today's break in Bank Nifty is indicative that it will follow through. So what I'm trying to say here is that in a free fall, these oversold readings are not going to really work. And you don't need to preempt an early bottom. You simply need to let it go. Something that I wrote in my long short report in September was that, you are in a seasonally bearish period till the end of October. India didn't peak out in September. It waited till the beginning of October, and US has still not sold off, but it looks like now we do have a peak in the US market as well. And all of this is going to continue to put downward pressure in the coming week or two. So don't look for an early bottom. Don't get into short-term oversold readings. We'll have to look for some of the medium-term indicators now to really get oversold, and that has not happened. I mean, I can highlight one of the indicators I was just looking at, and that's the, on strike, we have the number of stocks below the 100 DMA for the Nifty 500. So I'm taking a wider basket. The reason to take a wider basket is this is a broad-based fall, and you want to actually see when that number reaches extreme oversold, which is typically between 20 and 10% or below 10%. And we are right now at around 28. So we still have room for, that to really sell off and get into oversold territory. So it looks like the, fall may not be over. Don't make an early judgment. That is my, short take.
Rohit, just to come back to you, I missed that NSE 500 number of stocks below the 100-day.
That's right.
Was that
correct?
And you're saying 28% are below the 100-day.
That's the number right now. It's 28%, and we could very well see it go to 20 to 10% before you say that it's extremely oversold.
We could go to what?
Anywhere from 20 to 10. Sometimes it goes sub 10% also before you get extremely oversold.
Right. Now, I would imagine, just to clarify, now the percentage of stocks below the 100-day, if that percentage increases, then you get to oversold conditions, right? That's what.
No. The number of stocks that are below the 20, and I'm not saying 20. I'm saying the 50-day average.
Okay.
That's with the Nifty 500. So that's 500 stocks. Out of these 500 stocks, 28% are now below this level. Okay, the 100-day moving average. That is what we are talking about. So now, if you get to a level where 10% of the stocks are below. I'm saying it. I'm sure I'm saying it wrong. It's that 10%. Only 10% are above. Okay, so we measure it as percentage above the level. Sorry for the mistake.
Okay.
Slip of
so 28. So 28% needs to go to 90% of the NSE 500 stocks need to be below their 100-day moving average. That's when historically you would classify this as oversold.
Yeah, so
we're still quite far away.
90% are below, correct.
So we're still quite far away. We're at 28%.
Yeah, only 28% of stocks are above right now. So from 28 to 10, that's still a lot of room. Oh. And that should give us a lot more downside on the market itself. Especially when the Bank Nifty gives in. See, what I was saying is Bank Nifty has just started falling today. And if that also does what the other indices have done, then it will add to the damage.
Okay, and what would be the critical markers on the Nifty Bank?
So breaking 51,000 today was the sign that, it's headed lower. It's also going to be closing, probably it looks like below the 20-week average. So that damages the weekly outlook. I will then be looking at something around 48,500 odd as the eventual level where it might stabilize in this fall. Similarly, if I put a level on Nifty also, it's going to be at least around 23,700. Now that may appear closer because it's already in a free fall. But Bank Nifty, I think, is just getting started, so it still has some room.
Just getting back to the mother market, US markets, you also said that the US markets perhaps may have peaked. Are you seeing a lot of downside, or would they spend time just consolidating around these levels? What's the call on the US markets?
Yeah, so I don't have the depth of how far down it will go, but what is clear is that historically we've seen the US market always fall ahead of the election. Okay, and so far it didn't happen this time. It usually happens by early October. It didn't happen this time because of the Fed rate cut. That created a lot of enthusiasm, a lot of money coming into the markets, buying banking stocks and small caps and so on. That sort of drove this rally. You saw that the Dow Jones actually outperformed the Nasdaq in the near term over the last couple of weeks. So a lot of money went into cyclicals and other places. But now that is petered out. We are seeing a loss of momentum, and I think that seasonal phase is starting to play out where markets actually dip into the US elections. Now there's also a case where they actually improve after the election results. So I don't know if it'll follow both things exactly, but we do have short-term momentum indicators giving us a sell signal. So therefore, I think the pre-election sell-off has at least started. So in that sense, we are saying, probably look for the bottom only closer to the US election around 5th of November. That would be a better time to take a judgment on, whether we are bottoming or not. So I think the next week should still be seeing much more selling pressure built up in US equities as well. And unfortunately, along with that, you're also seeing US bond yields rise. So that is acting as an additional pressure point to the US market, apart from just the seasonal factor.
Rohit, hi, good afternoon. So, been listening to you. Let's just come back to the Nifty for a second and talk about sort of big picture levels now, since you're not ruling out the correction continuing for a while. What are the next levels that you're tracking? We got a view, by the way, from Lawrence Blanco a couple of days back. I mean, he said that a retest of the 200 DMA could perhaps also happen, which is about some 750 points away, 700 points away from where we are. Your thoughts? Nifty levels now.
Yeah, so 23,700 is going to be the first one that we're looking at on the downside, and 23,200 is a second level that we can actually put out there. The first one is more based on Fibonacci extension ratios in terms of the wave structure where it can head. The second one is based on a classic pattern known as a head and shoulders stopping pattern. So if we actually check out the head and shoulders pattern on the Nifty, and we extend the target down, then it goes to around 23,200. So these are two levels that we'll initially start with. I can't rule out that what happens in a free fall. Sometimes all levels get exceeded. So right now we can't say that okay, this is the level at which it's going to bottom. But these are the sort of goalposts that we are looking at for the market on the downside.
But Rohit, that's a fair caveat to put in over there. The question is that you still seem pretty convinced that this is not over. So then, so short trades are possible at this point, because all the levels are at least 300, 400, if not more, points away from where we are.
Yeah, I think the risk reward on Bank Nifty is still very good on the short side. On Nifty, if I look at the hourly chart, the RSI is down to a 17, which is sort of oversold. So I would like some kind of an intraday bounce to really do something on the Nifty if I have to add to shorts over there. Otherwise, I wouldn't add them right away at this point, given the reading of an hourly oversold. So that's a very short-term thing. So something, if not today, maybe on Monday, you get some kind of an intraday pullback, 100, 200 points, you would like to actually sell into it. That is how I would think about shorting the Nifty, but not immediately, not at this level.
Okay, so got that point. You're saying that Bank Nifty is a better short than the Nifty at this point in time. What about any counter trades, to play even bounces on the upside? And I understand this will be for very, very nimble-footed traders. But since the Nifty is so almost oversold now, would you play any counter trend rally on the upside, either through one stock, two stocks, index, anything on the upside?
So there's this old saying, right? Don't catch a falling knife. We are in that scenario.
Okay.
You don't
Okay.
want to catch a falling knife. It's going to cut right through your hand and go through.
Gosh. So this is a falling knife, huh? That's what you're saying.
Yes, absolutely. This is a falling knife. In fact, most people have not seen this kind of a decline, I think, since COVID. You haven't seen it go one way because every time you had short-term oversold conditions, the market bounced back, either mid-caps or large caps. Something supported the market here and there. And we've never really felt this kind of pain, which is almost one-sided, which is why I think people will not be able to relate with it at this moment because it's too far behind in time and there's no recency bias. So, which is why you need to be extremely cautious, let it happen. Don't try to catch a falling knife. When it goes this way, they're selling every day, which you can't relate with anything, whether US market bounces, doesn't bounce, and it keeps falling. So this is not something you want to really interact with.
Rohit, so why is this a fallen knife? I mean, should we delve on that a little bit? What's your sense? What are the dominating drivers?
So here's a combination of things. For at least 8 to 9 months, I'm sure you've heard yourself several fund managers raise risks on the side of valuations. On the other hand, we've all been tracking only one thing, which is there's a lot of liquidity in our market. Right, so there's a lot of liquidity coming in that's keeping it up. So we continue to trade momentum. Now we know, as technicians, we know how to trade momentum. We can come up with a setup. We can follow it up with a moving average, or use classic Dow theory and hold on. But the question is, momentum is lost. Then what happens? Because you are trading a market that is overextended on valuations. Now simultaneously, we have had the hurdle of earnings growth, right, coming down significantly over the last 2 quarters. Now there is hope. Yes, that the government spending kicks in again in the second half and that works out, or if interest rates get cut, that sort of works out. And I've also highlighted those hopes over the last month or two, so I'm not denying that. But the problem here is that we are starting to see the first breakdown of at least the rally that started from March 2023. Okay, so let's at least take that segment in mind. Now, when we take that segment, then none of the indices that we're talking of, whether it's Nifty, mid-cap, small-cap, or the 500, during this time period, they did not break the 20-week average. That is the interesting part. The Nifty did so once in a year back in October of 23, but the others did not. And they've just continued to hold on to this level. Now today, and this is a Friday and it's a weekly closing, so it's a good time to highlight it. Not just the small cap and mid cap, the Nifty 500, Bank Nifty and Nifty, all of them are closing below the 20-week average. This is the first time since March of 23. So this is like after 18 months that you are actually doing that. So it at least ends the rally that started from March of 2023. So that is one segment that is coming to a halt. Now what that usually means is that you go into a multi-month consolidation phase, or alternately, are we going to go into a slightly more bearish phase? Now that's a choice you have to make. We might not be able to judge that right away, but it means that there is downside, in the medium term as well. So one thing is looking for short-term bottoms, when we get down to that 23,200 or whatever we talked of, and when we get there, definitely there's a bounce. You'll get a retracement. But will you actually go back to the highs? That becomes a bigger question, and it may not happen immediately. You may get multiple rallies that have sharp retracements, and then you get another round of selling, and then that can go on for months together, just like we saw between, say, October 21 and June of 22. Something similar can also play out. So those are things to keep in mind, that when you're in that kind of phase, then performance gets extremely narrow. Like even that time, you had a couple of large caps, and then you had the autos that actually outperformed, but not everything else. A lot of things actually went down. This time around, it's been a much more broad rally. You've had overbought readings in so many things, so you're seeing a lot more selling across the board. I think the bigger danger here, if you ask me, is actually in the mid-cap, small-cap segment, which has been through a 3-4 year type of bull run. Usually when the mid-cap bull run pauses, so even if the Nifty does stabilize at some point of time, the mid and small-cap bull runs can actually go into a corrective phase or an underperformance phase for a almost 2-year period. This has happened at least the last 3 times we've seen a 2-year-long underperformance phases, 2005, 2006, 2010-11, 2018 to 2020. And so we are at another juncture where something like that is also possible.
Okay, all right. I think the clear takeaway is that one needs to be on guard, and this may not be entirely over as yet. Rohit, that's helpful. We'll keep those levels in mind for the Nifty, like you said. First port of call is going to be 23,700, and if that goes, then we could be looking at some more sort of deeper lower levels. Got that. Thanks very much. You have a good weekend, and we'll connect again soon with the market call.